Uh, well, we don't have a lot of people on today, so I'm turning it over to you guys. No, I'm kidding. Well, I will turn it over to you guys, but um, I know I changed the time today. I was supposed to have a dinner tonight, but didn't. Ends up not happening. So I was just reading that Kevin Durant. This is, I mean, in terms of stuff I'm reading today, it was just on the tape. Kevin Durant made 53 times his investment in Bitcoin. I think he bought Bitcoin in 2017, and I'm thinking to myself, interesting. He's one of these, everyone knows Kevin Durant is, obviously, or probably, basketball player, probably makes 40 million bucks a year playing basketball, and invested a whole mess of money into Bitcoin in 2017 and, made a fortune. Anyway, I thought that was pretty interesting. So anybody buy Coinbase? Anybody want to talk about Coinbase? Anyone even care about Coinbase? You buy it, Case?
I watched it start trading when it exactly started trading, but I didn't pull the trigger just yet.
Yeah.
Just because I think for me it's just too hot right now, and just like a lot, I think they went the direct listing route, but
yeah,
I think it spiked. I was watching it spike to like I think highs of 440, then dropped to low 300. So
yeah.
Just looking at the price action, I was like, yeah, I'm gonna wait, give it 3 to 4 weeks. I'm looking at maybe 250 as a buy-in.
So anyway, so Coinbase, the ticker's coin. I wrote about a little bit today, but the thing that's interesting is that if you think crypto is going to become more mainstream, which I guess it is, I guess it sort of is, they are the first mover in terms of buying and selling crypto. And their strength is they have this, I'm not saying they have a moat because I don't think there's a barrier to entry to get into this business, but everyone knows who Coinbase is. They trust them. And if you got another exchange that was going to do this, I think it'd be a lot of hard to break into the ecosystem of crypto. But the thing they do is they charge 0.46% for every $100 of crypto bought and sold. 0.46%. When you go to Fidelity, they charge zero, and when you go buy a stock at Fidelity, they charge zero. When you go to E-Trade, they charge zero. When you go to UBS, they charge 0.02%. So the way they're growing their revenue, and revenue's gone up 11-fold from last quarter, first quarter 2020 to first quarter 2021, up 11-fold from I think it was 1.2 billion to 1.8 billion. Sorry, 120 million to 1.8 billion. And the perception is that that's going to keep going. So when this thing IPO'd yesterday, first of all, they put this $250 number out as what's called the reference price. And all that means is that the last private trade that occurred in Coinbase is basically the reference price. And I think it traded at 250 maybe 6 months ago, which is up a lot from the last time it ever traded. So when they do a direct listing versus an IPO, what the company does, because you don't have an underwriter like a normal IPO, the company is either contacted by institutions or vice versa, and they take indications. So let's say Fidelity says, all right, I need to buy $500 million of it and I'll pay X. And then Kathy Wood, who bought 250 million, she goes, I need to buy 250 million and I'll pay this price. And then Goldman Sachs Asset, and then Franklin Asset, and then New Jersey Teachers Pension Fund, and they all chime in. So then they get to an intermediary like Goldman Sachs or Morgan Stanley, and all the flow. And Morgan Stanley's not making money off this, but they take all this information. So you got all this supply coming out of Coinbase, which at first we thought it was 110 million shares. It turned out to be 261 million shares, of which none of this money is going to the company. All this money is coming from selling shareholders. So if you read their S1, you see, I forget some of the names in here, but people who bought this thing 10 years ago for pennies on the dollar were happy to sell it at whatever the reference price was or whatever the first trading price was. So when Morgan Stanley or Goldman Sachs then does, they're not taking a fee now, but they're matching up for the company the best prices and the biggest sizes. So let's just see if Fidelity says, I want $1 billion and I'll pay 300. And then someone else says, I want $500 million and I'll pay this. And they figure a price where they're going to get the whole thing sold, basically. So it's not the kind of thing where I can call up my broker at UBS and go, hey, can you get me 100 shares of Coinbase or 50 shares or 10 shares? Because they're just going to laugh. It's like, it's not a retail market, it's institutional market. So what happens is they go around and they get all the orders, they put them all in this big, spreadsheet basically. And then they call the company and go, okay, we're selling all these shares at this price. Here are all the buyers. But the company is selling the shares to these investors direct. A little different than going through an intermediary, a little different. So then, okay, so everything gets placed the night before Coinbase came, which was 2 nights ago. You see on the tape, okay, the reference price is 250, the deal's done. So they've sold 261 million shares. The next day, which was yesterday, I believe, yesterday, all the broker dealers, all the market makers come in and they try to figure out how to open this thing. So they're trying to match up sellers who are now these institutions and buyers who didn't get any stock. So they run around the world and they fit, and Goldman and Morgan, I think, were leading the first trade out of the box on this thing, so to speak. And the first trade out was, I think, 381. And that was like the clearing price where other institutions were taking, not people like us, but other institutions were taken care of. Once it starts trading, it hits the tape, hits the NASDAQ at 381, then it can trade wherever it wants. So it ended up going up to 425 or 430, which valued the company at, I think, $140 billion. Didn't make it to 600 like some people thought. I had it wrong. I thought it was going to trade a lot differently. I owe Kenny a hot dog, of course, but whatever. And then it closed at last night at 20 something. I think it's kind of muddling around right down in the 300s right now. But here's the thing. When you look at this stock versus other stocks in the world, what's the revenue going to be this year? I mean, if they did 1.8 billion for the first quarter, let's say they do 2.5 for the next 3 quarters. All right, we're still talking about $10 billion in revenue versus a company that's valued at 100 to $140 billion. So should an exchange trade, Zudart, should an exchange company, there's only a few public exchange companies, like ICE is the other one that I would compare this to. So ICE, which is the Intercontinental Exchange, they own the NYSE and a bunch of other exchanges. That trades at a much different multiple than this. And this has, right now, it has one product. So when you look at ICE, which is, and you can buy NASDAQ also. So NASDAQ, I think, is NDAQ, ICE is ICE, and then you got Coin. So, it's very expensive in terms of its relative value, but it's also very unique. So if crypto becomes, and so I'm giving you the negative for a second, but the positive is that we all start trading. We all get, enamored with crypto. We all buy crypto. We all buy it on Coinbase, and this thing grows like a weed, which could happen too. So, I think people were happy to pay up for it, but the question is, you're going to have to look at the earnings now every quarter to see where it stands versus its competitors. And it doesn't, so at the same time, there's no moat. So with the New York Stock Exchange, there's no moat. I know I mentioned today in my little thing this morning, I was reading about tokenized stock trading today, which you can find it all on the internet, where you don't live in the US, but you want to buy stock in Tesla, which is already trading. You can buy it through blockchain now in a tokenized form. And I'm reading this and I'm going, so I'm sitting at a desk in Pakistan or India or Kuala Lumpur. I don't have access to the US stock market, basically. and I can just buy it through this exchange and have it have the exchange, be my broker basically. So, the world, I guess my point with that is the world is just changing and changing and changing so fast. And all of us, I'm the oldest guy in the room here, and it's so hard to keep up on these changes like day to day. Kenny, yeah, that's a good question. Anyone have an account at Coinbase?
Say that. What was the question, John?
Anybody have an account at Coinbase? Anyone actually doing this?
Yeah. So John, I do buy cryptocurrency and Bitcoin, but I don't use Coinbase. I don't like their platform personally. I use something called Ledger. So it's, in my opinion, it's the best cold wallet on the market currently. So it's
what's a cold wallet? I gotta ask.
So
it's like a digital wallet.
It's an actual hardware. It's like almost like a flash drive, and it's completely off the grid. Whereas like it's not connected with the internet, so you can't get hacked. None of that. It's completely off the grid. So there's multiple ways of like connection. So
it's called Ledger. I gotta look. This is so fascinating to me. Ledger.
Yeah, the technology is pretty top notch. It's called Ledger, Ledger. So it's a cold wallet, but on the platform you can actually buy Bitcoin and other cryptocurrencies. I will say, compared to Coinbase has the option to buy vast other cryptocurrencies.
Yeah.
But in my opinion, a lot of the other cryptocurrencies are really they're useless. They don't really have value. They're just kind of just there.
So it's interesting. It's interesting you bring that up, because in Coinbase, when they talk about the revenue stream, most of it's Bitcoin, and 40% they say is other. Mm-hmm. And one of my friends goes to me, others like Dogecoin.
Yeah, I mean, even
these crazy cryptos. I've never even heard of these things.
Yeah, for me personally, my top are in this order. For me, it's Ethereum, Bitcoin, Litecoin, XRP, which is Ripple, Cardano, ADA, and then last is Stellar, XLM. That's just
Is anyone else on this call doing this?
Yeah, I got some Ethereum and some Bitcoin.
You got them too. So
yeah, and okay. And I use Coinbase. It's pretty good. I can't complain.
Can you do this through Robinhood?
Yeah, you can, but there's no wallet with Robinhood. With Robinhood, if you buy the cryptocurrency, you can't transfer in and out. You have to at least sell or buy. So I think with Robinhood, they're going to offer customers the right to have an actual wallet where they can transfer in and out. But the thing is that when you buy this Bitcoin and crypto on like Robinhood or Coinbase, you don't actually own it. And I don't think people understand that. Like when you buy it, yeah, you bought it, but if they were to crash any moment, you lose your holding. So that's the whole point of a cold wallet. With a cold wallet, you actually own your securities. So that's why they keep saying, make sure you transfer all your Bitcoin and crypto to a cold wallet, so you actually own it. So
that's the first I've ever heard of that. That's pretty interesting, actually.
Huh. Yeah.
Huh. Interesting. It's a brand new world out there, and this whole digitization of everything is fascinating. China is thinking about doing a virtual currency and literally eliminating cash in the next 10 years. And you got to think about the ramifications to that. Is the US going to do one? I mean, I was reading like the Capri, which is a great research shop, had 10 things. I should just read this to you. So there was a little thing, 10 predictions for the next 10 years. This is, anybody can get this. I just took it off from Capital Research is the source. Really good research company. They have a lot of mutual funds also. But like institutionally, when on Wall Street, they're called Capri, basically, just kind of shorten it. But I just want to give you their top 10 things that are going to happen here, which is interesting. Top 10 predictions for the next 10 years, without going into gory detail. Healthcare innovation will reach warp speed. So we talk about healthcare here all the time. We talk about how the Apple Watch, is going to become, one of the main tools for healthcare. But when you read this article, it's not just the Apple Watch, it's everything. It's like AI doing diagnostics, all this crazy stuff. Robotics. Who were talking about last week, a census. Companies like that who are now going to be in the operating room with the doctor, but robot is going to be, more involved with the surgery as time goes on. In fact, speaking of robots, anyone see the post today? What robot was in the post today, and what was it used for? Anybody see it?
I saw the New York Police Department
Exactly.
with
So they're
the
using
dog
Spot.
robot.
They're using the robot from Boston Dynamics. Just a rehash. Boston Dynamics, I don't get it, was owned by Google, and they sold it to SoftBank and Hyundai, right? And now, since they sold it to these companies, all of a sudden, these robots, if you follow them on LinkedIn, follow Boston Dynamics. First of all, the robots are fascinating, but now they're using them like to go into a house, to do, not just bomb stuff, but stuff. Really interesting. A little creepy, but really interesting. Anyhow, get back to where we were. So healthcare innovation reach warp speed. A cure for cancer may be around the corner. Cash will be a distant memory. This is in the next 10 years. This is what this company thinks. So you think you get $10 in your pocket, you're not going to have that anymore. It's going to be on your phone, your watch, or in a chip or something. Semiconductors will be in everything. Now that's interesting. Now I know some of you know one of my favorite companies is Nvidia, which has had an amazing week. They've had a 4-day investor conference this week. Kenny and I have listened to some of this stuff. It's the ticker's NVDA. So this stock literally is up 150 points since Monday, or maybe last week sometime. But the announcements and what they're doing and the types of chips they're developing, this chip called Grace, it's 10 times faster than Intel's chip. And it's not going to be used for GPUs, it's going to be used for CPUs. Yeah, NVDA, Nancy Victor Dog Apple. And, I'm not telling you to go out and buy it because that's not what this is about. But if you look back 2013, 14, 15, this stock sat at 25 to 35, just sat there. I mean, for like months, didn't do anything. Then it went up a bit, went down and this and that. And all of a sudden, their technology is just pushing these guys ahead of AMD and Intel and just about everybody else. So they're deep in gaming. They're about to buy this company called ARM, which is a $40 billion acquisition. There's lots of rumors that they're not going to be able to buy it because of it's going to limit competition. Right. See what Casey said? The CEO, Kenny, what's his name? Jensen.
Hong or Hing? I can't pronounce it.
Yeah. The CEO is amazing. He's like the Jeff Bezos of semiconductors. And, he sold a little stock here and there, but he's basically in it for the long run. But this company, I mean, if anyone wants, I have a bar. I sent to Kenny, I know, but if you want it, it's a pretty good in-depth report on this company. And I would just keep it on your radar. This is to me, it has lots of Amazon, Google, FANG characteristics in a lot of way. It's very dominant. The market opportunity is huge. And the runway for the market is the next 10 to 20 years. So when you think about a gamer, you want everything to be faster. Ticker's Nancy Victor Dog Apple. Now it's high dollar priced, right? I think it traded today at 630 or 640. When you're buying, $1,000 worth of it, that's you're not really buying a lot. But to dollar average this thing over the next, 3 to 5 years, probably not the worst idea I've ever had. Probably not the worst idea. That's it, NVDA. And you can put it up against all the other companies and see what it looks like. But it's been on a tear since last week, as have all the big caps. So, Casey and I were talking about, I'm going to get back to this in a second, but before the call, Casey and I were talking about this. The market a month ago, all Apple, Amazon, Google, all in the dumps. Nobody wanted to own the big caps. They wanted to own the Russell. All these little small cap stocks, all the growthy stuff, all the stuff that has no earnings today or tomorrow, but by 2025 is going to be killing it. And over the last 3 weeks, the Russell has gone this way and big tech and the Dow have gone this way, like dramatically. You can see it today even. I mean, the Dow's at 34,000 today. And when you look in the NASDAQ, which is up or was up a lot today, it's really Facebook, Microsoft, Apple, Google, Amazon, Nvidia. It's not Ascensius. It's not Durant, right? Durant, which I think is could be one of the great ones, has gone from 84 to 44. Two reasons: small, no revenue, no news. So I like every day I get up, I look Durant. All right, get another state under your belt. Get another state approval for your technology. Not seeing it. So investors, in the short-term investors, they get very skittish very quickly. They want to go where something else is better. So that's one of the problems with the Russell right now. You can see it in all the EV space. You can see it in companies like Blink and QuantumScape. Somebody put a big short report out today on QuantumScape and charge all these companies. All of a sudden people realize, you know what, this is not tomorrow's revenue stream. This revenue stream is 2, 3, 4 years out. Where if I buy Apple, I know Apple's going to report numbers 15 days from today, and you know they're going to be good. You know they're going to raise their dividend. Johnson & Johnson, even if this shot works or doesn't work, they're going to have earnings in a couple of days. They're going to raise their dividend. Cash flow, cash flow, cash flow, and revenue. Where Durant and Ascensius and all the other stuff that you may own in your speculative Russell basket, jury's out. So we seem to be in this recovery phase. Yet what's been happening with interest rates the last couple of days? Today you had retail sales up 9.8% versus an expectation of 6%. Where's the 10-year today versus where it was just 5 days ago? 20 basis points lower. So it went from 170 to 150. Explain that one to me. I mean, I'll explain it to you, but when the 10-year acts better, so bond prices go up, yields go down, you would think investors would buy more of the riskiest assets. It's not happening this time. It's been a little change in philosophy. People are gunning for Amazon and JP Morgan and all these other companies, and not these smaller futuristic type companies. And then what Powell said, this was the greatest thing he said. He said this on 60 Minutes last Sunday night. This is one of the keys for all of us on this call. This, if you remember nothing else, he said, tapering going to precede the rate rise. So what does that mean? Tapering will precede the rate rise. He says this on 60 Minutes. So what it means is the Fed for the last, 20 years has been buying bonds back every month. And that puts a floor on bond prices and keeps yields low. When he's saying that when the economy normalizes, and it's moving that way, he thinks it's a couple of years up, but it's moving that way, they're going to stop buying bonds back. And that's going to precede a rate increase. So what he's telling us is that you got to listen to the Fed really closely. And as soon as they say, okay, we're done buying, the market's going to turn really quickly and turn down, I think. So don't fight the Fed. Listen to Jerome Powell. Really interesting comments he made. Could be 2 years off, though. Because the recovery's going on, but the recovery's not as robust as we all think. I mean, I'm not ready to get on a plane yet. I don't want to eat indoors yet. New York is open, but it's open, but it's not open. It's like both. So I got a feeling it's going to be a little tentative. And then you see, this problem with the J&J vaccine. Most cases are now in young people who aren't paying attention anymore. Now, Pfizer today comes out and says you're going to need a booster shot within 9 months. I mean, I read that and I'm like, what? So it sounds to me like instead of getting a flu shot next year, I'll be getting another COVID shot. It sounds like the COVID shot is going to replace the flu shot to me. But in terms of the Fed, Powell is watching employment so hard, and employment is still, really situational. And then he's coupling that with talking about doing his bond buybacks. And when all that stuff unfolds, then rates are going to go up. And then the stock market will probably go down, is my guess. So things to think about. Just want to get back to the Capri stuff for another second. So semiconductors will be everywhere. Wearable technology will blur the lines of reality. So you'll have things you'll be wearing. You'll have, I don't know, chips in your jacket. You'll have a chip in your arm. You'll have whatever, telling your blood pressure and every other thing we're talking about. You're having a stroke, go to the hospital, that kind of stuff. But that'll become like more prevalent. Digital entertainment will take center stage, which I think is already happening. Autonomous vehicles will hit the fast lane, but that's interesting. So we haven't really seen that in this part of the country yet. In Phoenix, Google is test driving autonomous cars every day. Like they're way ahead of Tesla with this stuff. So don't be shocked if that happens sooner than we think. Green machines will rule the road, so EV stuff. Renewable energy will power the world. And last but not least, innovative companies will make the world better. So it's great all this stuff is happening, and it is going to make the world better. But when we're on this call, we're thinking about not only does it make the world better, is it profitable? Are the margins sustainable? Does management know what they're doing? Is their bench deep? And what's the moat? So those are things, you know, I think about all the time these days. Like, what's the moat? What's the like Coinbase is great in a way, and in a way it scares me to death. I mean, if ICE said tonight, okay, we're going to start trading crypto, I think Coinbase would be down 50% because everyone knows, you know, the New York Stock Exchange. So don't be shocked that I'm not going to be shocked if that happens. We'll see. Questions, comments? Anything you guys want to talk about? Keep going.
You know, you were talking about healthcare, John, and you're talking about wearables and diagnostics and stuff. And I think one of the things I think is amazing is how they do that with diabetics and their blood sugar now. Like they don't have to finger prick anymore. They just have a device on their arm that can constantly tell them what their you know, what the blood sugar is. And I think that's just an example that's easy to comprehend about where we're going with medical stuff.
I mean, it's great. If you're diabetic, this is the greatest thing. You don't have to stick yourself all the time. You know, it's great. So there's a couple companies that do that. Dexcom is one of them. I think there's like 2 or 3 others, but it's a huge business also. And then the other thing with healthcare, and you know, I think about demographics, and we've talked about this a lot, but I was looking at this chart today. So by 2050, if this is coming from, you know, one of my things I read, 50% of the world's GDP is going to be in Asia by 2050. Not that far away. So this is this theory about this. So China is going to be at 58 trillion. India at 44 trillion, USA at 34 trillion, and then Indonesia at 10 trillion. But the thing that's interesting here is that right now, India's GDP is only 3.6 trillion. So if you're looking at growth and India is going to go from 3.6 trillion to 44 trillion over 30 years, we all need to find a way to invest in India. Not very easy. You can't, single stocks, there's a handful, right? So you got to do it through either an ETF, it's one that tickers IFN, or a bunch of crazy mutual funds. Most of them are run by a company called Matthews. So if you want to take a look at one of these things, MINDX is the Matthews India one. It's a mutual fund. And I think if you want India exposure, in IFN, you get it through financials, and in MINDX, you get it through all the other companies there. So it's worth taking a look at if you're a real long-term investor and you think that India actually can do this, right? So the problem in India, there's 50 different states basically, and everyone's sort of like on their own. So they got to pull the whole country together, which they haven't been able to do yet. But We'll see. We'll see. But the demographics are right. Demographics in the US are not right. Our population is, it's like in Japan, our population is aging. Unfortunately, we need our young people to take care of us. Every day, 10,000 people turn 65. Where in China, Indonesia, and India, it's a much younger population. So when you're a growth investor for a long period of time, I think you have to have some exposure in Southeast Asia. And I think the hardest place to get it is India, but it's something to sort of start thinking about a little bit. I mean, India is still really cheap. I mean, these mutual funds haven't done much versus China. So just something to think about. And maybe you want to, like, when you're putting your portfolio together, kind of think about how to do it, but I would not take single stock risk in India. I don't think. I think it's too opaque. It's too hard to follow this stuff. China, you can do it. Most of the Chinese stuff that, like Alibaba or Baidu or these companies are listed US, and that's easy. So why did Alibaba go up last week? What was the big Alibaba news?
Didn't they get hit with a big
fine?
Big fine from the Chinese.
So why would the stock trade up after that?
It's sort of in the rearview mirror now.
Exactly.
There was uncertainty before. Now it's just a fine. We're done. Let's move on.
So when you think about risk, right? The problem with Alibaba every day is what's the government going to do? What are they going to do to these people? And investors get really scared really quick. And then they find out, oh, it's a $3 billion fine. That's it. So it's like, oh God, it's not worse. They didn't seize the company. Jack's not in, whatever we were thinking. Only $3 billion, big deal. Back to business as normal. So thought that was interesting. Then you saw the Tencent news last week where their biggest shareholder sold $15 billion worth of stock. It's a company called Naspers, which spun off their Tencent into this company called Prosus, Prosy. And that took Tencent down, like Kenny calls to me in the morning, why is Tencent down like 9%? And I'm like, there's no news. Supply and demand. This huge piece of stock, $15 billion worth, came on the market. If you're a buyer, obviously you want to buy it lower. So with the magic of hedge funds and everybody else pushing the stock around, there it is. The block trades, and guess what? Now the stock's back up to almost where it was. So it's hard to see some of these things from the outside, but the more you're on the internet, you go into the investor relations portals of these companies, the more of this stuff you learn, and it makes investing in a lot of them so much easier. And you get, so when you think about Baba or Tencent, which I think are great companies, anytime they're down 5 or 10%, I'm always curious why that is. I mean, they seem sort of unstoppable in a way. Wait, what's Branson selling, Case? I can't read that.
Richard Branson, Space, Virgin Galactic. Today, he sold 150 million worth of Virgin Galactic. So it's trading down right now.
Well, he sold it.
Yeah, he sold. And a month prior, Chamath sold about 100 million worth.
Yeah.
So
these are bad signs.
Well,
they're bad signs for two reasons. And forget the first guy. I know he's the hedonistic guy or whatever. I don't really care so much about him. But Branson, he's the guy, right? That would be like Elon Musk going, all right, I'm selling $1 billion worth of Tesla tonight. Sorry, I need money to do something.
I still think he's the guy, but I know with Richard, he has other ventures that he's currently working on. I know with the SPAC, VJ.
I'm just saying for me.
Yeah, no, it's definitely a red flag, but I still,
as an investor, when I see management selling, I get unless it's option related, unless it's related to their comp, and unless it's going into it's IRA, it's in their 401k or something like that. You know what? Sell it when you're done. I don't want to be owning it when you're selling it. That's why I'll never buy Facebook. But that's it. But I look really closely at this stuff. When, I've told everyone here before, when you look in Barron's, there's a page, insider buys and insider sells. and it's the top trades. So it's not insider trading. They're just insiders. They're CEOs, they're directors, whatever they are. And when I see, a guy from Okta selling, or a guy from Palantir or Peloton, I'm like, well, wait a second. These companies have these long growth. Why are you selling stock? So if it's to buy a house, great. You got divorced, great. Just to cash out, not great. Not great. So a lot of people don't even look at that, but I think it's a pretty big indicator for, if I'm going to buy a stock or not. I really check that out pretty thoroughly. So, and again, Zuckerberg every week is selling stock. Musk, never. Bezos, once in a while to fund another venture. So if Branson actually sold it to fund another venture, great. But I don't know if that's the case. I think he may be in a little bit of financial difficulty, which might be the case.
I know for Chamath, when he sold it was for another venture. So I guess with Richard, he'll have to explain why he sold eventually, or
yeah. But remember, Branson is a visionary. This guy Chamath, I don't know who he is. He hasn't. These companies, he's like a hanger-on almost that's gotten lucky with a couple of these things, and he's become like an influencer. I don't know if I buy that. So I was reading an article. I was telling somebody here today, an article today about influencers giving financial advice on social media, and I'm like, that's almost worse than watching Kramer on TV do it. I mean, these people, they have influence, but I've heard them speak. They're not financial people, right? So for them to give advice, and people listen to them, and I'm like, man, I really think twice about this. I'm not telling you the whole side of every story here. So I'd be careful with that. I'd be careful when people are trying to sell, it's like the same thing as a salesman trying to sell you something. Be very skeptical of these people. What are they getting out of this?
John, is there information out there that will tell you why these CEOs are selling stock?
Nope. Well, but Zach, the only thing you can do is you go, if you really want to dig into it, you go into their investor relations segment, any company, and it'll say it was related to an option they got 10 years ago for retirement planning, stuff like that. They don't even know they're selling it basically. That's fine. But when Zuckerberg every week sells, $1 billion worth of stock, that's not fine. That's all. So it's one data point in many. It's not the end all be all, but again, Elon Musk would be, he owns 19% of Tesla. He hasn't sold a share. He's probably borrowed against and all that stuff, but he hasn't sold any. So again, if you read in the Wall Street Journal tomorrow that Musk is starting to sell stock, or he's got 5 years to retirement or something like that, I bet the price of Tesla would change materially. It's just something to look at. So as investors, we want to make the most informed decision. And when we're buying single stocks, which again are the riskiest things you can do, it's easy to find all this information out. 10 years ago, it wasn't. Now it's easy. I can get all on my phone, on the computer, in the FDU Bloomberg lab. Easy to get. So it's worth, your time to take a time out and say, all right, let me just recheck this management team and how much stock they own. Oh, and what happens when you look at a company and management doesn't own any stock? What do you make of that? So they're paying themselves a fortune, but they're not taking equity risk, and I am? Whoa. That's, and that happens too.
Do you have an example of that?
No, but I'll come back with one next week. I don't have one off the top of my head. But I don't like it when look, in a utility company, you own Con Edison. I really don't care that the CEO owns stock. But in Blink or Tesla or, QuantumScape or any of these SPAC type things, I want these people to be on my side. So speaking of the SPAC market for a minute, I don't know if anyone noticed, but last week, 28 SPACs went public. This week, just one. And what I'm hearing from my people are that the market is just jammed up. There's 430 out targets, and the buyers on the IPOs, who are mostly hedge funds, are saying, you know what, time out. Let some of these things find their targets. The market's not acting great. In SPAC land, we're not buying them right now. And you can see it in the underwriting. When Citigroup came out with their earnings today and JP Morgan yesterday, they were both above $1 billion in revenue from their equity underwriting. That mostly comes from SPACs. So one of the reasons their stocks didn't do so well today is people are going, well, that's not going to happen. That can't continue because the SPAC IPO market has kind of dried up a little bit. Here's a good example. So today there's a SPAC, the ticker's DEH. It's Bill Gates backed, and they're buying a medical robotics company. So not in a census, but it's in that, I think it's called virtuous. So when DraftKings did this, the stock went from 10 to 60 like in 6 months. So now you've got a medical robotics company. You got Bill Gates behind it. You got a pipe. So all these private investors, Fidelity, and all these people are all lined up, and they're making a great merger. Did the stock move today? No. And that tells me that the market is just, and this, I think this company could be great, but ticker's DEH, you can watch it, don't buy it, but you can watch it. But it's now a show me market because there's no revenue for 2 years. 6 months ago, a year ago, this DEH, as soon as they said Bill Gates, the stock would have been at 20. Or Kathy Woods is buying it, like she bought all these CM life science companies. They went from like 11 to 27, like in a nanosecond. They're not doing that right now. People are very suspicious about this whole sector. Valuations are very stressed, and it's more of a show me market. So that's why you're seeing these big caps rally and the Russell and the small caps just kind of sit there. They're kind of out of gas. So what's going to happen 2 weeks from now? Here's the next thing that's going to happen. 2 weeks from now, Amazon's going to be up another 5 or 10%, Google and the rest of them. And then some pundit's going to come out and go, all right, it's time to sell all of those and buy the Russell because the Russell's underperforming, right? And then you get all the momentum traders to reverse the whole trade. So not going to happen today, but don't be shocked if that happens. Yeah, a little rotation, which is natural. And don't forget, these money managers, it's not like us where you can give yourself a grade every day. I was up 0.5% today. I was down 1%. You can look every quarter. You can look once a year. These money managers are graded once a quarter, but literally every week they're under pressure to perform. So when things start rotating, PMs, a lot of PMs, particularly with who have a short-term bias, rotate a lot faster than people like us. And that's what causes the volatility in the market. So you're the New Jersey State Pension Fund. You've got your money out in 20 hedge funds, right? And all of them have different strategies. The money is not as sticky as it was 5 years ago, 10 years ago. So I'm the guy, I'm in the state of New Jersey. I'm running, $100 billion, and I got money on all these places. And this one fund is doing awful. I call the guy or the woman up. Hey, what's the matter? Oh, well, we're in the wrong. We're in our thesis is wrong right now. It'll be okay. And the guy from New Jersey Pension Fund goes, that may well be, but I want my money back. And that perpetuates this whole rotation thing. So it's not just like you or I selling 10 shares of Amazon and buying 1,000 shares of Ascenius. We're talking about hundreds of millions of dollars that are active in the volatility, which we haven't seen a lot of real volatility yet, really is probably going to pick up. So we'll see. But this performance-based stuff, particularly in pension funds, where so many are underfunded. Like if you have, I've said this before, but if you have a pension at a private company, look at JCPenney, look at companies that go bankrupt and the pension fund's underfunded. Even though a pension fund is a contract, you're going to get less than what you thought. So you work for the government, all is good. you work for J.C. Penney and you were supposed to get $1,000 a month. Maybe you're getting $150 a month. Just very uncertain. So that's and you know, for you younger people, you're not going to have a pension. You know, that system doesn't even exist anymore. But just something to think about in the terms of, you know, how the market works and moves around and everything. I liked what. So I just wanted to go through this Bailey Gifford stuff. So I know I talk about that with some people on the phone, but so Bailey Gifford is like this very long-term mutual fund investor, very little turnover. They're like Ron Barron, they're like Warren Buffett. They're certainly not like, you know, like a Fidelity account that turns itself over 100 times a year. These guys, I think Bailey Gifford has 1 or 2% turnover every year. But they said so there was a conference call, you could have listened to it. But what was the guy's name? Tom
Slater.
Tom Slater, yeah. You want to listen to Tom Slater for 25 minutes? He's the guy. But you can go on their website and see all this stuff. But what I love about them is they're looking for companies that use new business models with new technologies. So they're very forward looking. They don't mind paying high valuations for growth companies because the best ideas never look cheap. So they'll buy a Tesla, they'll buy an Amazon, and they'll stick with it. They're not just going to buy it, goes down 10%, they're going to sell it. They're probably just going to buy more. And then what I liked about what they said about Amazon, so they talk about this web services business. The market is, we talk about that a lot. The market's large. They have Amazon's got this first mover advantage. They're at scale and it's got a 20-year runway. So when you think about companies morphing to the cloud, I think the first person you call is Amazon. So when I think about Amazon as an investment, it's got all these different parts. And, you know, if they split it up, God bless. I'd love to know what the web services business looks like, particularly on its own. But that'd be totally fine by me. All these splits, all these breakups and splits tend to work in the investor's favor. Like with telephone, you can ask your parents or your grandparents about telephone. When they split that thing in '84 into 7 parts, the parts were worth almost 2 times the whole. And I think in Amazon's case, that would probably be the case, I think.
I think the story with Amazon too is we don't even know what new ventures they're going to have in the next 10 years.
It's,
you know, that's like you're valuing it now on what you see in front of you, but
yeah,
they're dreaming of other things that we don't, you know, we're not privy to, but you know, we're going to come.
Yeah. I mean, when you look at it, you know, you look at these companies to hire the best and the brightest, which is great. And to Kenny's point, they're working on stuff that's just going to shock us all. I mean, when Tim Cook, I keep going back to this because I got to remind myself, Tim Cook says Apple's a healthcare company. It wants to be a healthcare company. I'm like, no, it's not. It's a hardware company. It's a phone company. No, it's a healthcare company. And that just leads me to believe that they're going to report earnings April 30th, and he's going to be talking about the Apple Watch as a wearable healthcare tool. And how the next time I go get a physical, my doctor, in the next 2 years, the doctor's going to go, take this Apple Watch. You're now connected to me. I'm going to take your pulse every day. If you're, you know, take your pulse every day. You're having a stroke, I'm going to call you, take you to the hospital. And I'm going to be like, great.
Yeah.
Privacy issue? I don't care about privacy. You're going to save my life? Great. Yeah, Case.
No, yeah. If Tim Cook can actually do that, I think he's probably going to go down as one of the best CEOs in the market, because right now I think he's boring. But one thing
he's boring.
I think he's just not. He's a okay CEO, but he doesn't take any risk, in my opinion. That really just makes me think, wow. Like, in my opinion, like with Apple, the way he kind of structured the Apple Watch, you know, like everyone wants an Apple Watch, everyone wants this. So he's saying how it's a healthcare company. You think it's a phone Apple Watch company. If the case does end up being successful, where, you know, it does end up being a healthcare company, they already have a lot of users that use the iPhones, the Apple Watches. It's going to be game changer.
But, you know, if you're in the Amazon ecosystem, you're probably not leaving. I mean, every one of my family has an Apple phone, an Apple computer, and all that other stuff. The thing about Apple, though, I think what he's also going to talk, so I'm guessing what he's going to talk about, but he's going to talk about the Apple EV car, which I think they're working on this, but somebody walked me through the numbers on if they came out with a car, a Tesla-like car, and how much market share they would get that quickly. And that's another thing that scares me about the EV market. Remember, go back to 1915, 485 public car companies. By 1925, 3 of them had 85% of the market. So today, every day you read the paper, there's another EV car company coming out. China, India, Indonesia, Volvo, every car company is an EV car company. But I would have a sneaking suspicion that Apple would probably be a pretty interesting one to drive. So they'll probably hook up with Ford or somebody like that to build the thing. But the infrastructure would all be Apple. And I think that would be pretty interesting. But we'll see. We'll see. No idea if that's going to happen or not. I think it's more healthcare driven. The last thing, so we're right in the middle of earnings season. You saw these big banks report, Wells Fargo, JP Morgan, Citi, I think tomorrow's Morgan Stanley. Underwriting's been great, but the earnings have been great. The thing that's worrying me in the banks is that loan demand is soft. Jamie Dimon, who's the best in the business, loan demand at JP Morgan is soft. And I was talking to somebody about this today, but basically the fintechs are eating into their business. So if you're going to go borrow, if you're going to get a mortgage, you're going to go buy a home equity loan, all this other stuff, you can do it cheaper at companies like SoFi than JP Morgan, and easier, right? So all these fintechs have sprouted up, and they're cutting all these margins to get people to borrow money from them, with very different dynamics than a traditional bank. And I think what you're going to see is JP and Citi and all these other banks have to make acquisitions of these companies to keep market share. So don't be shocked if you start seeing that. And in fact, Jamie said, looking for space, but looking for acquisitions. So don't be shocked if you see something in that neck of the woods very shortly. Be kind of interesting. All right, anybody else? All right, we'll go back to the normal time next week. Oh, wait, are we? Yeah, I guess we'll do it. We'll do normal time next week and that. If you have any questions during the week, email me. I know Zudort and I were in talking about Gap this week. But anything you want to talk about, I'd rather come back and share it with everybody, and that's, the more information, the more stuff, the better. All right. Peace. See you next week. Pleasure.